Good evening, all. Ira Epstein, and as you can see, I'm not in the videos again, and I won't be until probably the end of next week. As I told you, it's holiday time. We're moving our home, family in from out of town, so I'm using my portable computer right now and getting everything out for you, and I hope you appreciate that. Interesting day. We had a massive amount of economic data, some friendly, some not so friendly, but you have to weigh it. What does friendly mean? Does friendly mean that it's weak enough to cause an interest rate cut come December or January? The percentages are favoring January, but by maybe 5 percentage points. So it's a coin toss, and we'll have a lot of data between now and that point. And as you know, we're in the quiet period now for the Fed, so we're not going to hear from Fed members. Now we wait and see what's going to happen. The news of the day that moved the market was a report by who, I don't know, but a report came out and it hit the press that the lead runner at this point in time for the Fed chair is supposedly Kevin Hassett. Now, we also saw this morning that Scott Bessent was on financial TV, and he had said that he expects that the president will make a decision on the next Fed chair before Christmas. That's no surprise at all. That makes all the sense. The reason the market, in my opinion, rallied so nicely off of Kevin Hassett was because on November 20th or so, he said that he thinks the right thing for the Fed to do at this upcoming meeting is cut interest rates again. So the market looked at it. The leader, if that's true for this, is saying cut rates again. The stock market looked at left and right and said, why not go up? And away you went. You carried the metals too. Now, we've had a certain amount of selling hitting in the gold market. Is you're in the roll. You got to come out of these contracts and move to the next one unless you want to get delivery of products. But that is not the game that I'm looking for. I'll look for other games right now. Also keep in the back of your mind that we're soon going to roll from the Dece contracts, like in all the interest rates now, to the March. Currency roll will begin where we come out of the Deces into the March. And soon you'll be getting the same in the stock indices. You have another day or so to go in Bitcoin, and it seems to it came up, let me use the right grammar, from the 80,000 level back to 8750, but that's, a bump. What can you say about it? Energy prices sort of stable tonight. Let's go and look at charts. As we take a look at the weekly close-only chart of the S&P, you're not at the highs, but you've come back. The high was 68.74 on a weekly closing basis. We're at 67.89, so roughly 90 points from that. It's not the end of the earth. We've come up nicely. If you look at the last rally high right here, in this market, it was 67.91 and a quarter, and today we cleared that. So what that does for the swing line study is you now have a lower low and a higher high. That means you're out of the downtrend. It doesn't mean you're yet in an uptrend. The market closed over the 18-week average of closes. That's a bullish figure. The market stayed and held. If we go back here 2 days ago, the 100-day average, the Bollinger Band, where I think the pros were covering shorts, and all of a sudden the market has lifted itself up. And in the slow stochastics right through here, there we go. Let me just move that over. The market has turned itself up too. So I have bias up as the market's over the 18-day average. I have momentum up, but not the swing line yet. When we take a look at the Nasdaq, it rallied back, and it's challenging right now, the 18-day average of closes. It has the bias down since it's still under it, and it has momentum trying to pick up. So we're back to a close to neutral state, not quite there. You really need to get over right here. Let me give you this high. Let me get this right here, 25,310, and you haven't been able to do that yet. That's what you have to get over to negate the downtrend. The Dow negated its downtrend. It got over this rally high point right here, giving you a lower low, higher high, back to a pretty neutral status as I see it in the marketplace. When we take a look at the Russell, I said to you yesterday, this looks like the strongest of the indices, and look at how it came up. It came up beautifully. It's showing that to be the case, and why is so simple to understand. If interest rates are going to see the cycle of cutting continue, the Russell 2000 has the stocks that are the lower end stocks, lower cap is the way that you really say that. They rely on lending, they borrow like mad, and they need a rate that the lower it goes, the more profitable or close to it they can get, and that's helping these companies. In the DAX, as I told you, we were coming back up. I thought we would hold the rally up to the 100-day average, and we went right through it. That's not going to act as resistance now in the market. It's more support than anything. You cleared this last rally high of 43.13, so getting the 43.59, the 18-day average, is the next goal. The D's notes, look, it's running the upper Bollinger Band. It's not embedded. It's an overbought market, but it doesn't want to be bearish. The same is true. True is a great word. True of the D's 2-year notes. In the dollar index, you lost the bullishness. You had one run at the upper Bollinger Band. You gave it up, and the market fell right back to the 18-day average. If it closes under that, it's in the bear camp. At the same time, the euro couldn't make it down to the Bollinger Band or the 100-day average. You can see that right through here. This a 200-day average, not the 100. I'm sorry for saying that. And it didn't fit that, and it went back up, and it's turned the trend up. So now you're back in an uptrend in the euro compared to the dollar. I wouldn't be surprised if the pros look at this market right here and think if they're going to buy it or not. In the Japanese yen, you're out of your downtrend. You lost your bearish embedded reading. We will see what happens in this market. It's going to get interesting. In Bitcoin, the market is still in a downtrend, or is it? It lost its bearish embedded reading. And when you lose that reading, it flirted with it yesterday. Remember, I said it lost it yesterday. This was the day before. This was Friday. This was yesterday. And now the question is, without it re-embedding, this market can make a run again. Then we get to the energies, and I see them all as still bearish for all the reasons that I've given you, with Russia potentially ending the war with Ukraine. One of the demands will be that they can put their oil back on the market, and the increases you're going to get out of OPEC anyways. Now we can look at this. Look at how you went from the upper Bollinger Band. It gave you an opportunity out and went right down to the bottom here. I don't see a trend trade at all in that market. And I can say the same thing of natural gas. So these markets, what I think they're doing is they're getting themselves back into the areas where the market's going to be closed on Thursday. We'll have light volume on Friday. And then we get into the Christmas rally time, and we'll see if that really shows up. So far, it's looking good. Santa may have left the North Pole in the stock indices, and maybe he's on the way here. Want to remind you, if you want to see our free offers, just move your cursor up to the top here. Remember, you can always look over here on YouTube, and there'll be an icon you can click there. With that, I'm Ira Epstein. You have yourself a great evening, and thanks for watching.